All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Earlier today, we talked about shorting this rally, kind of what I'm looking for that, and it hasn't happened here today. It's definitely not something where I look at and go, "Wow, okay, we're at levels that have to be shorted." We haven't seen the 20K volume, but I'm not going to rehash all that. I'll let you kind of go back and review that if you'd like. But we do have a bullish signal on the board here this morning, or this afternoon, excuse me. And that's Dollar General. Now, Dollar General is one of those that's on the watch list, but I'm not willing to trade it every time because the options for it at times can get a little spread happy and just not be a very good value. They're not bad right now, and I want to be in something, so I'm gonna go trade it. I'm gonna go trade the signal, trade it regularly, just with a little bit of a different option. So let's go make it happen. All right. Here's the chart on Dollar General. You can kind of see what that looks like. 3-day crossing above the 7-day. We have a 20-day moving average that's rising. It's been in a long consolidation here, and is it going to break out? That's what the signal's suggesting here, and it's looking for about a $5 move initially, right? Which would not be that big of a deal. Dollar General also doesn't have much to do with the market, meaning you can't look at Dollar General and tell whether the market's up or down. On most days, you can't tell the magnitude that the market's up or down. So it's very if you're looking at this like a market play, you're going, well, you know what, we can't go buy a put or something on something else. No, this is a very Dollar General specific, specific trade with a very specific stock. And so I'm going to go out and I'm going to buy the 21st of February. I'm only giving myself 24 days instead of the typical 30. And that's just because of liquidity. And looking at the 157.5 calls in 5 contracts here. Now, this is a little bit less money than what I typically would put in, but doing that simply because of the option itself. I have to kind of realize there's about $500 worth of risk here on the position from the dollar amount, changing on the stock, or from the delta. And then there's a time risk here that's about $300. So I do have to account for that here. And so going to go in and make this trade here, and I'm in on 5 contracts at 288. That was nice. I had an order for 290, filled me at 288. All right, so let's go out and get the make sure the alert goes out here, and 288 on 5 contracts, and this is the 21st of February. 157.50 calls here for Dollar General, and boom, off and rolling. All right, I'll wait for the thumbs up here on that and go from there. All right, so into Dollar General. Now let's kind of fill things in here. Our stock price when I made the trade, 157.12. All right, 157.12. Option entry price 288. So this is going to give us our stock exit level of 154.62 and our price target of 162.12. Let's get that from Netflix to Dollar General. And there we go. So our auto exit date, 131, so that'll be Friday. And then our next auto exit date, green option, would be 2/4 or Tuesday of next week. And about 1,400 cash in. So similar to what we put into Netflix. And I know I'd like to put a little bit more in, but I'm not going to just yet. All right, let's see. Vega Theta's $30, Vega's 81. So what that means is if we lose a point of implied volatility, it'll cost the trade $81 per point. And if, and then it's going to cost basically $30 a day to be in the trade. And the delta is $248. So each dollar higher, $248 in gain, and that ratchets up as the stock goes up, and vice versa as the stock goes down. And then the market vibe here today is -3 bearish. All right, so there we go. All right, so into Dollar General and off and rolling here with that, and plenty of cash to to jump into the next signal when it when it comes on. All right. Alrighty. Let me just pull up the chart again. You can kind of see where the stop is. Stop is this 154.62 level. So would be breaking kind of the 20-day moving average. Just kind of corresponds there. And then the price target. We're looking up here near October highs. To come into play. This is one that's been consolidating for so long now. We could see it make a massive move, meaning it's something where we could be looking at it $20, $30 later. We don't have options. We don't have earnings priced into the options or anything like that. So nice to not have to deal with that. All right. All right. So that's Dollar General. All right. As far as the scans, kind of how they look here today, nothing else triggering, but you can see upside crossovers on Chipotle, Apple, AT&T, Walmart. Walmart just dipped a little too much. Consolidation risk on it's too high. AT&T, high consolidation risk there. But when it comes to Apple, Chipotle, and AT&T, they all have earnings upcoming here. So even if they had triggered, not very playable there for them. And then on the downside here, we had Under Armour on the list this morning, but no longer on the list. What's on the list is gold, GOLD. And I thought for a little bit that we might see a bearish trigger here on it. And it's not. It's not triggering bearish. It's consolidation risk component's just too high here. So, it would be nice to see it maybe drift down tomorrow and then start to turn back up, give us a nice little upside signal, be able to play gold, GOLD higher. It's a beautiful, beautiful chart pattern that it's forming here, this rounding pattern. And, these are not super common patterns, but, man, they are very accurate as far as what their end result is. And their end result tends to be a very nice breakout higher. And it's just, for me with gold, it's just a matter of time. So I love seeing that downward cross and hopefully, we're able to take advantage of the upside cross when it comes and play that breakout. So very pleased to see that, that downside move there. It's one of those things where you think about the coronavirus and what's the point in owning gold if we're going to have a global pandemic. There isn't much of a point of owning gold if we're going to have a global pandemic. But, there is a possibility that it does get bought up, if, the fear factor, rises. But it's not the fear factor. It's not market dropping that is driving gold higher, here over the last 6 months. We talked about it back here in May and the major breakouts that are happening. You think about the S&P. It's near all-time highs. In fact, last week it set an all-time high, right? And gold has been going on up. This isn't something where, gold up, market down, market up, gold down. That's not what this is. Gold is its own beast. And yeah, there are days where, gold's just going to get sold because the market's up big, or gold's going to get bought up a little bit because the market's down big. But in terms of the longer-term correlation there, it's not market dependent at all. And, this is something that I'm still very bullish on. I still think, has a long way higher to go. You take a look at this monthly chart, and we're talking about it breaking out after a 6-year consolidation. 6 years. It has been a very long time since gold has made a monster run, and to see the gold run into the 200 area as we go forward into 2020 and 2021 is what I expect to see there. Okay, so we'll see. That's GOLD again. My bias on gold doesn't matter. If GOLD triggers, then I'll go buy it for the challenge, and if it doesn't, then I won't. And we'll continue to work it that way. All right. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here tomorrow morning, and we'll talk to you then. Take care.